Hello traders, today I'm bringing you the Patreon suggested video of supply and demand runs on the 1 second TradingView time frame. So a new update that just came to TradingView is they now allow for 1 second tick charts. What you're looking at is the trading on BitMEX, XBT, USD from every second. Now you may wonder, why on earth would we ever want to look at this information? Well, what I would recommend is try not to look at the 1 second time frame and apply something like technical indicators to it, or try to apply a price action volume analysis to it. There's something a bit different that we're going to be looking at today, and it's not the traditional TA. What we're going to be looking at are supply runs, demand runs, and equilibrium. This is a way of categorizing limit order book movements so that we can get our orders filled. Remember that what we're looking at today is not estimating whether price will rise, fall, or go sideways. It's taking advantage of price doing so and getting our limit orders filled so that we don't have to use market orders. What exactly are these? Well, you're in the right place for that. The first thing that I want to talk about is a demand run. A demand run is when you see price just going one way, and that's up. This is a demand run. Price was just going up. Now what you would see in the order book is you would see a lot of market buying and a lot of bids and really not many offers. You'd see cumulative bids at about, a very high number, like here it's 4 million, and not many cumulative offers. It was at 500K. You'd see a lot of market buying. That would be a demand run, and price is likely to continue to rise. And probably within a few seconds, it will rise. Come on, price. Well, it did. It rose $0.50. How exciting is that? It rose $0.50, and I gave it some time. I was like, okay, is price going to rise on cue because there's not many offers? There's a lot of bids. This best offer is about to get eaten away. But it looks like price wanted to slow down a bit there. All that I'm showing here is this is a demand run, and that's why you see this kind of, one direction up. Yeah, now price moved upward, as you can see. Price was at 843, now we're moving upward. I didn't really predict that. I just saw that because this is a demand run, and it's just obvious that price was going to rise. Many bids, not many offers, and a lot of market buying. A lot of people want to buy, and price goes up. That is a demand run. But we also have our supply runs. Now, a supply run is when you see price just going in one direction, and that is down. The third type of market structure that I want to talk about is equilibrium. Equilibrium is when nothing is happening. This. Price is not going anywhere. There's not a lot of market buying. There's not a lot of market selling. You can see there's really not a lot of volume here, right? Really none at all at the very end. And the bids and the offers aren't really that strong, but eventually one side wins out. So you may wonder, well, all right, we have these three kinds of market structures, but why am I looking at the 1 second time frame, and how does this help me in my actual trading day to day? Whether I'm a scalper or even investor or even, a swing trader or a longer term trader. Well, what you can do with this is, first of all, a good trader is going to master all time frames. A good trader, even who trades on the daily time frame, is going to want to fill their order at the best possible price. Some may say, hey, whatever, what's a few basis points? What's my position being 0.5% higher and 0.5% worse? Well, it all adds up in the end, and someone who's good at strategy and tactics is going to be a good trader. Strategy would be doing analysis on those higher time frames, understanding where price is going to go in the future. Tactics is going to be how exactly to execute your orders so that you can get the best possible fills and have the smallest losses and the largest gains. Today, we're going at tactics. Now, one thing that we can do is we can get our limit sell orders filled on a demand run like this. This is where it is very easy to get your limit sell order filled. We can get our limit buy orders filled on a supply run. The reason I say that is this is because we have an overabundance of supply, meaning it's very easy for us to fill our demand, for us to fill our limit buy order. We have an overabundance of demand, it's very easy for us to fill our limit sell order. If everyone in the room wants to buy something, we can probably charge a much higher price. If everyone in the room wants to sell something, we can probably charge a much lower price to take advantage of those people. And then the third structure, equilibrium, there's really not much we can do. It's more just of a gridlock, and we have to wait until one side wins out. Now, what I want to look at today is let's first just do a few minutes of classification and also predicting these supply and demand runs, and then we're going to look into how we can actually use them to our benefit. Now, right now, as I go forward on this 1 second TradingView chart, we're not looking at the live, order book and what? Oh, still a demand run. We had a supply run, and we're gonna have demand run back up after we hit support. We're not looking at the live order book, from the past. We're just looking at this right here. We can still make justifications on what's likely to happen. What do we see right now? You guys can tell me, currently from here to here, is this a supply run, demand run, or more equilibrium? And if it is, what would you do about it? Okay, this is a supply run, and if you're bullish, you'd probably think about getting one of your limit buy orders filled. If you're bearish, you'd probably want to wait till a demand run occurs. So if you're bullish, you may have gotten your limit buy orders filled there. As you can see, filled right here. And if you were bearish, what you could have done is waited for the price to go up and then get your order filled on a demand run. So you wait till price goes down, because you don't want to be the guy who's bearish and then market sells the bottom. That's kind of stupid. What you want to do is be bearish, be calm, and wait for price to rise back again, and then to get that limit sell order filled by just waiting for the demand run to occur, seeing a lot of demand, not a lot of supply, a lot of market buying, and then you place a limit sell order somewhere in the order book, in the present order book that you see. I need to stress for the 20th time that, guys, this is not a strategy of bullish or bearish. We are just using this strategy to fill our limit orders. This is expecting that you've already done your analysis whether price will be bullish or bearish. This is not just trying to get in the firing lane, just try to fill a limit order. There has to be some kind of reasoning for filling that limit order before you ever do it. You're not just going to wait for a demand run and just, slide in a limit sell order, because there's no justification for that. What you could do is, if your analysis says, hey, I'm bearish in the short term, then you can wait for a demand run. You can get that order filled, and then boom. You could potentially scalp that by, you get it filled on a demand run, and then you wait for the supply to come, and then you can potentially even close that short, a very short-term trade, and receive the rebate as well. So what we see here is a current demand run, right? And the demand run continues, and then it went to equilibrium, and then it turned into supply. You can see then it broke past support, and then it shot back up, and we had a very good demand run right here. Now, one strategy that you can use, and that some traders like to use, is you can wait for a very strong demand run or a very strong supply run, and then whenever you see a retracement on that, you can take advantage of it. Here's basically what I mean by that. You see a strong demand run here, so we're bullish in the very short term. We're thinking the price is going to continue. So anytime the price goes into a supply run, we get our limit buy order filled right here. And we get that. And if you were believing that this was just going to continue higher, then you wait for that supply run and you can get your buy order filled here or here. And that would have worked out pretty well. You're just looking for that strong trend, waiting for the opposite kind of run to occur, get that filled, and then you get that, as you can see there. So these kinds of strategies are great for getting limit orders filled instead of using market orders, because market orders can carry high fees, and you can also transact at pretty bad prices if you're trading with a lot of liquidity. Now what I want to do is, let's do a prediction right here. Will price rise or fall? I always like doing these. These are not easy because this is the 1 second time frame, which a lot of people are just going to call noise. I don't just call it noise, because there's a reason why these things are happening. As crazy as that may sound, people might say, hey, for me, I think that this is just noise. I look at a daily chart. I'm going to be honest, for me, I find that the 1 second chart is more predictable than the daily chart. And I will argue that point on any stage, on any interview, that I believe that the 1 second chart is more predictable than the daily chart. I feel like someone in the comments is going to definitely challenge me on that, but lovely. Okay, so do you think that this is going to turn into a continued demand run upward? Do we think that this is just a stop loss hunt, a liquidity grab, and then this is going to turn into a supply run down? You can verbally or non-verbally submit your prediction here, and we'll see what happens. There's a lot of buying volume, as you can see here, a lot of market buying. And as a result, price fell. This was just a stop loss hunt. There was way too much market buying late in an uptrend, and price reversed. This would have been a not terrible time to get your limit sell order filled. Now the final thing that I want to do, and probably the most important, is live analysis with a live order book. All right, what do you see right now? What is this? To me, this looks like a demand run is attempting to emerge. I'm seeing market buying, and I'm expecting price to rise. And price does rise, just like that. And if you want to see that price rise on the 1 second chart, you can see that happen right here. I'm expecting that this demand run might carry a little bit higher. And it did, like that. I said that it was going to move a little bit higher when price was here because I saw that the bids were dominant over the offers. There was a large amount of market buying. And then we also had a bit of a stop loss hunt down here, filled some liquidity, and price rose. Now what I'm on the lookout for is when this demand run is going to turn into equilibrium or when it's going to turn into a supply run. If it was equilibrium, we would just see equal bids and equal offers and really not one side dominating. But right now, I still see a pretty strong demand run. Now, if I was interested in shorting this, now would potentially be the time to place a limit sell order and get my short order filled. But what we see right now is a little bit more equilibrium. And we'll see how this equilibrium resolves and also how long it lasts. So price is going sideways right now in equilibrium. Now make your prediction now. Is this equilibrium going to turn to demand? Or is this equilibrium going to turn to supply? I'd say you only have a few seconds to really decide. I don't want to say mine because it's gonna influence what you guys think. And this is great practice to do on your own, is to look at these moves, is to watch them and then predict what's going to happen. Because if you can predict the short term, then you can get some amazing limit orders filled at great prices and never have to use market orders because you're just taking advantage of the short-term supply and demand of the market. We're still in equilibrium. Still in equilibrium here. Yep. As you can see. Is this going to turn down or up, or is this just going to be sideways for the next 25 minutes? And I'm going to end up talking about some random topic just to keep it interesting. What's it going to be today? Sports? Politics? Well, it can't be politics because that'll get me. That would not be good. That would be or religion, politics, all the iffies, all the ones that I'm not supposed to talk about. So it looks like we do still have a bit of an equilibrium, really not much happening. It looks like we have a little bit of supply coming in. We have a good amount of more supply coming in. Do you think this is going to continue? Well, I think the market answered that itself. Now, do traders think that this price is low? They're going to take advantage of it and buy it up. Or are traders just going to continue to sell? Or are traders going to do absolutely nothing? This is going to stay equilibrium. Looks like we had some supply. And it looks like to me that traders might be buying this guy up. And they did. Right as I said, traders might be buying this one up. Boop. A few seconds later, it went up. Now, are we going to go back to here and just continue to go to equilibrium? Or is this just retracement like a boop, boop, boop with a continued supply run because traders now think that this price is too high? Yeah, we'll see. These 1 second time frames can be phenomenal for reading these supply and demand runs. And another thing I'd recommend is I did say be careful with looking at price and volume analysis on the 1 second because it's the 1 second time frame. There's only one reason I would ever use this, and this is for supply demand runs and coordinating that with the limit order book. But another thing to look at is just volume. During a 1 second, you can see some cool volume things like this. Hey, this was $2 million worth transacted in 1 second. That's pretty significant. Or we can zoom out and look for, hey, where was the absolute largest amount of volume transacted? Around here. Why is that important, guys? Well, if you look at where the highest volume transacted is, you can find points that will likely become support and resistance in the future. So if I see that a lot of volume was transacted here, I'm reasonably confident that this could become resistance. There was a lot of volume that was transacted here, and this did become resistance. Well, why? Well, if we had a lot of traders buying here, price goes down. When price goes back up, some of these traders might be scared, and they may just want to exit their positions at break even, meaning that there may be more supply coming in than demand, meaning the supply run might just be more likely. Now, if we go to other points in time when there's a lot of volume transacted on a single move, you can see, not surprisingly, that point becomes a support. Beautiful example here. Volume spike, they're right here. Lots of volume transacted, and let me just show that. What did that become, guys? Yeah, that became support. See that right there? Price never went lower. Why did this whole area become support? Well, some traders had bought, some traders had shorted right here, and the traders who had shorted were trapped in their positions, and price rose to burn the shorts. If we look at other volume spikes, we can also use those as short-term support and resistance, such as the volume can be kind of wonky. It looks like it's like shifting it sometimes. We had a volume spike at the very top of the market. Oh Lord, at 11,850, 11,840 to 11,850. I'm going to keep that point in mind. 11,840, 11,840, 11,850. Yeah, that's around here. When price just and then just began to move sideways. Not let those traders become too profitable. So if that part was a little bit confusing or a little bit of a segue, just remember, guys, that high volume spots in the 1 second can reveal where a lot of traders had entered positions. You might also want to look at open interest for that, of course, to see if they're actually entering positions. And you can use that to find where traders might be trapped, which could become support and resistance. There are a lot of things you can do with a 1 second time frame. And a lot of the 1 second doubters are going to say, oh, it's just noise. You know, I kind of understand their point. But I think they're neglecting the power that this granularity can really give you. And if you keep practicing at it, you know, you go from a naysayer to a guy who can actually predict it with, what, like 80% accuracy? And if you can predict this with 80% accuracy, then you can get filled at amazing prices, as long as you keep your risk management in check, of course. One last prediction, then I got to end this video. We're in equilibrium right here. Is price up or down? What's going to happen? Here's a tip. Look at volume. And most importantly, the easiest thing that's going to help us is this. Looks like we're currently in equilibrium, but who looks to be dominating? The sellers or the buyers? Look at market orders and look at the bids and the offers. We're still in equilibrium here, but one side is going to win. Price isn't going to bounce from 804, 804.5 for the rest of eternity. That's not going to happen. What's going to happen is one of these sides is going to win this battle. Who's it going to be? I put my money on, I think you guys know who I'm going to say, but I feel like the minute I say it, it's going to go, you know. I put my money on the sellers here. Looks like we have more market selling, and as long as there isn't a lot of market buying, it looks like the sellers are stronger. We have a 1.83 million versus a 1.6 million supply versus demand. Now the demand went to 1.7 for a bit. Looks like we had more market selling within this equilibrium. To me, this feels like price might retrace a bit back down. If you think I'm wrong, then think I'm wrong and bet on the market going up. You know, what's going to happen, I have no idea. This is not being recorded at a future time. I can promise you that. This is live data, you know, and it could be my first error of the day. But we'll see if price goes down. Now I'm very invested to see if price goes down or up. I'm like, is my ego in the line? And price goes down. Woot woot! What am I, 5 for 5? 6 for 6? Price does go down. Price went down $0.50, but price did go down. I was saying, is price more likely to go down first or go up first? And price definitely, oh my god, look at that volume. How much was that? Oh, it's nothing. 694,000, yeah. It just looks like a lot of volume, but if I do this, you can see it's actually nothing. But still, I think that my prediction of price going down was correct. Yeah, and now price is about to fall. And price does fall. Like that. Now, yeah, I feel like I keep saying the same thing over and over, and that's a sign I should probably end the video soon. But this kind of analysis can tell you in the short term whether price is going to go up or down. You look at the 1 second time frame on TradingView. You look at the limit order book, and then you look at market orders versus market buy orders versus market sell orders. And if you can predict within the next 30 seconds to 60 seconds where price will be, then you can know when to put limit orders in a certain direction. If I'm bullish, and thankfully I think price is going to go down, I just slide in a limit buy order here. If I'm bullish, I know price is going to go up, I wait for price to go up. I wait for a supply run, I get my limit buy order filled, and price goes up, and we're good to go. If you guys have any other questions about supply demand runs or about the 1 second time frame and about how this interacts with limit order book, I have 2 guides. I have one that explains the entire order book and how to use the order book's data. You can pick up that guide in the description below. I also have an entire guide based on just price action volume, such as supply and demand runs, and how to make these kinds of predictions as well. I'm going to link that in the description below as well. And if you get either of these guides, you get access to special trading sites that I've created, and also a Discord group for professional traders as well to talk and analyze trades. With that, happy trading, and hop on that 1 second. Start grinding.